Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Today, we have a very special guest joining us. Please, everyone, welcome the Wealthion founder, Adam Taggart. Adam, welcome back.
Thanks so much. I've been really glad to be back here. I had a lot of fun on earlier with you and Jim and looking forward to doing it again.
Yeah, it's always a pleasure having you. We see every day in the news, Adam, issues with government spending and inflation. Still, there's politicians like Mitt Romney coming out saying, we need to print more money and send more money to families. Are they playing stupid or are they just doing it for votes?
They could be doing it for both reasons, to be honest. Those aren't mutually exclusive. I do think we have a complete crisis of terms of like a dearth of just understanding of the basics of economics amongst most of our political leaders. So I'll be kind and I won't call it stupid, but I might call it ignorant or uninformed. But absolutely, I believe that there is, kind of a vote buying element to here. We've seen it again and again, and out in my home state here of California, we're seeing it this week, where Governor Gavin Newsom just announced, kind of out of nowhere, that he is giving people basically inflation relief checks, where we'll be receiving, somewhere in the order of magnitude of up to a little bit over $1,000.
Crazy.
In the mail from the government in the form of tax rebates to help us deal with high gas prices and whatnot. So, not only do I think that is, a form of political pandering, but I think it's just sort of the classic example of, I can't remember if I mentioned this when I was on here last, guys, but those demotivational posters? My favorite one says, government, if you hate the problems we create, just wait till you get a load of our solutions, right? We've got this issue of high prices caused by inflation that was caused by pumping too much money into the system. And so what's our solution to that? Well, let's just give people more money then, right? I mean, obviously that money is going to go in and it's going to keep prices elevated. So not only do I think it's a pandering move, but I think it's just a boneheaded, reverse logic solution, in air quotes, to the problem we have here.
You're seeing this globally. We're seeing France is doing this, Germany's doing, a lot of countries all over are doing this. They're doing these sort of temporary checks, and they never quite mention where the money's coming from. I mean, in California's case, it's basically tax rebates. We take your money, then we give it back to you. Mm-hmm. We make you feel good about it because we gave you your own money. But in other countries, they're actually printing the money in order to give people checks. I mean, at the federal government level, it's basically just they have to borrow it or print it to make it happen. In the European Union, they have to do the same thing. But they never, it seems like the media never really explains that to people, that this is adding gas to the fire. They're not solving a problem, they're making it worse. And I gotta think, there's economists out there, well-known people who have audiences who know these things, but they don't seem to explain it. It's only us, let's call it the alt media on YouTube or Twitter, who seems to really just call this out honestly for what it is. Do you think there's a reason the corporate media refuses to, I'm talking the CNBCs, the Fox Business, why aren't they calling this out?
Yeah, it's a great question. It's funny you asked me this today, because I literally came to this interview from interviewing sort of, well-known economist Steve Hanke, who's a professor at Johns Hopkins. And he basically wrote a lot of op-eds last year, like in the Wall Street Journal and in other places, basically using Milton Friedman's formula, the equation of exchange, to say, hey guys, we're increasing the money supply here. We're going to get a massive inflation problem, and is shocked and frustrated by how little pickup that it received back then, but certainly has received now when it's sort of been proven true, over recent events. And as part of the interview I just had with him, he was sort of railing against the silence, this exact silence that you're talking about here. I think it's a combination of two things. One, reporters are regular people, and what's kind of nefarious about what's going on, the problems that the government has created here for us, is we do a horrible job of teaching financial literacy in our education system, right? So people don't understand how money is created. They don't understand the Fed's role and how what the Fed does can create higher prices later on. And so all they know is I'm experiencing pain right now because prices have really jumped. I need help. Give me money so I can afford things better, right? That's what the public is actually asking for. And I think there's a lot of journalists who write with that same mindset. So they just think, oh, magic money from the money printer is good if we can get more of it, right? Now, I do also think that there is an ideological pressure that's being placed on the media right now. Certainly the current administration, there's a lot of its economic leaders that are sort of from the modern monetary theory school. And this was something I was talking with Steve Hanke about. They deliberately are trying to kind of suppress the school of thought that makes the connections between money printing and inflation, and they're basically they're trying to push a methodology or a mindset that can ignore limits, I guess is probably the simplest way to say it. And so anything that sort of flies in the face of that narrative that they're trying to drive is something that they want suppressed. And so I'm sure that there is, pressure on those editorial boards inside of those mainstream media companies to not shine too bright a light on that, to not contradict the decision-making that's going on right now. Now, the sad part is of course, anybody that lives in the real world and has eyes, they can see the contradictory evidence themselves, but it's not something that is, being embraced in the approved narrative right now.
But if the media did have that debate in the country or helped push that debate, it would lead to a lot of uncomfortable questions of, all right, if it's money printing, why are we doing it? What changes need to be made? And then that leads to a bunch of uncomfortable budget decisions like, all right, well, if the Fed can't print the money, then the government can't fund all these programs, and then they have to talk about what they're cut. I mean, it just leads to a whole host of different policy debates that nobody wants to have in Washington, D.C. or many capitals around the world, right?
Well, absolutely. So, think about it this way. We've come to the point in politics, and not just in America, I would say in most other, major world countries, where it's just accepted that austerity is an election killer. Right, that any politician running on a platform of belt tightening is not going to get elected, and I think that there's truth in that. I think we have a populace that doesn't want to hear, that ideally wants to just hear good news. And hey, I'm going to vote for the candidate who's promising me the most, right?
Yeah.
So there is a cultural responsibility here. I don't want to just lay it all, at the feet of the guys in Washington. We put those guys there, in the first place, and we keep voting for them. So we do have some responsibility here. But I mean, the short answer of it, Jim, to your point is we have lived beyond our means for many decades now. And the only way in which we could potentially sort of engineer over time, sort of a soft landing and a return to a more stable and sustainable economic baseline, is going to require saying no to things, right? It's going to require actually beginning to live back within our means, maybe even under them for a certain period of time. I think that there's zero political appetite for that in the halls of Capitol Hill. And honestly, right now, I don't think the citizens understand the system enough to be asking for that. They are just looking at how they're increasingly getting pinched and saying, okay, who can help deliver relief to me right now, which is understandable. It's sad because it means we're oftentimes making short-sighted decisions that are actually going to make the longer term problems even more painful for us. But it's just sort of what we have right now, sadly.
Back in the 1970s, it took them, 7 or 8 years of trying everything else before they actually empowered Volcker to do what Volcker did at the end of the 70s, early 80s, raise interest rates up to kill inflation levels, 18-20%. But it took, all the mid and late 70s of everything else being tried, price controls, or they tried everything before they finally just gave up and realized we have to take our medicine. So I don't know, something's maybe we got to go through that 5 years of trying everything else like we're doing right now before we will get there.
Sadly, I think you're true. I think history is going to repeat itself strongly here, unless Jerome Powell, truly is wrapping the cloak of Volcker around himself and is just going to do whatever it takes here. But I think all the evidence we have to make that judgment right now, that seems like a low probability.
We're already seeing some Fed governors talking about pausing or, the rate cycle coming back down to easy money. Some of them are already hinting we might already be near the top of the rate cycle. I think they are near the top of the rate cycle, but not for the same reasons that, they think that they've got inflation under control with a, 2%, 3% Fed funds rate. I don't think they do, but we will see. The example of 1974, they had a recession in 1974, but it didn't fix inflation because it came roaring right back up to new highs of 10, 12, 14% right after the recession ended. So
right. So just talking to this Steve Hanke right before here, from his models, he thinks that inflation is going to remain high for the next couple of years. So he's got it pegged at 7% by the end of 2022 and 6% by the end of 2023. So that's still persistently high inflation there. And of course, that's just using his sort of academic model. Now, if we get to the point where, most people say is no, the Fed's not going to be able to raise rates very high because it's going to break something and they're going to be forced to go back to QE. And the odds of that happening are probably pretty good. And if they do, well, yeah, that's just going to add more air back into the inflation machine here. So, I think to your point, Jim, the Fed is it's going to try to do whatever it can before it has to get to that Volcker stage. And I'm not sure it's going to even do that until it has pure air cover, which is where we, the people, have elected a president to say, you've got to do whatever it takes to get inflation down. And I don't think we're there yet. I think we probably will have a step along the way where maybe we vote in, a democratic socialist who's just kind of like borrowing from the Gavin Newsom playbook. Oh, prices are too high for you? Well, here, let me give you all these, support programs, which are going to feel great the day you get them, but are then just going to make the prices even hotter, within the next couple of months and make the problem even worse in the long run. We're probably going to try that before we intentionally give the green light for a Volcker to come in.
Well, let's talk about how this is affecting individuals. A lot of individuals especially retirees, are the most vulnerable to inflation because they don't have the ability. Many retirees are on a fixed income of whether it's Social Security plus living off of their assets that they saved during a lifetime. And a lot of people are finding retirement choices to be very difficult right now with what's going on. They don't have the ability to increase their income like perhaps you or I do. We can, work harder, go get a second job, something like that. This is what you deal with Wealthion on a regular basis. You're an advisor to people who are investing for retirement. What are you seeing right now? What are you thinking? What are your clients thinking about this right now?
Well, obviously, our clients are very worried about, or the clients we refer to financial advisors are very worried about inflation's erosion on their retirement savings, right? So, they're worried about the finish line by which they might be able to retire is just getting pushed further and further out into the future. And of course, some of them are wondering, is it pushing it out so far I may never be able to retire? But I would say the general Wealthion audience, is they're more well-heeled. They're people that have been focused on wealth building for much of their careers. So they're kind of on the upper end of the bell curve in terms of Americans that have saved wealth. I'm writing a piece right now on just the level of preparedness, or actually the level of unpreparedness of the average American for retirement. So if you don't mind, let me just toss a couple of stats out there to really show you why I'm so worried. So I focus on the median because if you look at the mean of what mean net worth in America, it's so heavily skewed by the top 1% or 10% that own the vast majority of the assets.
Mhm.
If you look at the average, it paints an unrealistically rosy picture. So you look at the median, right, which is the 50th percentile person. So if you look at, so the majority of Americans have nothing saved for retirement. And that's all adults, right, 18 plus. So the key cohort to look at is the folks that are age 55 to 65, the cohort that is just about to retire, just about to hit retirement age. 49% of those people have zero saved up. So basically the median retirement account has $0 saved in it, right? So already half of them, no savings at all. Of the remaining half that do have savings, the median amount in that 50% is $134,000, right? Which isn't nothing. But if you're 65 and want to retire and want to fund the next 20 to 30 years of your life, that's not going to get you very far.
Yeah.
Right. So then people think, okay, well, maybe those people live on Social Security, they'll be supported by Medicare, right? Well, the average Social Security payment, monthly payment, is $1,660. That's not a livable wage, right? The average rent in America right now is $1,900. So the average Social Security check doesn't even make up for the average rent payment right now. Moreover, the Social Security Fund, the trustees of the fund just released their annual report, and they're showing that if nothing else is done, the Social Security Trust will become insolvent by 2035.
Wow.
But it's already negative, right? It's already bringing in less tax dollars than they're pushing. Remember back in the past recent decades, it was a net surplus, but
right.
the federal government just spent it all and pretended that they were putting it into a lockbox.
A lockbox, yeah, which is empty.
From Al Gore. Ivan's laughing, but this is an American thing from when he was a kid.
That's crazy.
But during Al Gore in the debates, those of us old enough remember, I'm going to put it in a lockbox.
The lockbox would be used only for Social Security and Medicare.
Right.
It was hilarious. SNL made so much fun of that back when SNL.
Right.
What's sad is the danger that was being raised in those presidential debates when they were talking about that. All we did was basically just ignore it, just kick the can down the road. And we're now beginning to get to the point where we're running out of road here, right? Yeah. And also Medicare, right? After retirement age, the average, amount of sort of like medical costs that a individual can expect run in the hundreds of thousands of dollars, right? And Medicare can be a real big support for folks, but the Medicare Trust also released its annual report recently and revealed that it will become insolvent in 2028, I believe.
Does that, when you say insolvent, does that mean it's putting out more money than the taxes assigned to it are bringing in, or you're saying some built up treasury bonds that are in an account are now exhausted? What's the definition of insolvent?
Yeah, it's a great question. Basically, it means it's at the point. It doesn't mean that it stops paying benefits like immediately, but it basically means that it starts very quickly getting on a path of depletion. And so right now, what those reports say, if nothing else is done, Social Security benefits will automatically drop in 2035 by 20%. And Medicare benefits will drop by 10%. And then if nothing else is done, beyond that, those benefits drop by further and further amounts as time goes on.
The retirees, the one thing they do is they vote. So the government will pay out those benefits and start raiding other accounts or the general fund or whatever, or they'll just print money. That's what
exactly. So yeah, you're going right to sort of, where I am, where you're going to have, it'll be a whole host of things, right? We probably definitely taxes will go up, right? That's the government's first step always to dealing with some sort of funding shortfall. It would be a great opening for those that have been pushing for a wealth tax to say, hey, we've got these people who've got assets. Let's take their money to pay for all these people who don't have enough saved up. And I think the big point here for just folks watching is if you're watching and if you are succeeding in building a nest egg for yourself, you may get much fewer of these entitlements than you've been promised to date, or maybe you won't get any, right? So they'll be doing means testing. They'll be pushing off the starting age for a lot of these entitlements. They'll be taxing, like I talked about. They might just be doing money printing, which obviously, still hits everybody because it diminishes the purchasing power of your dollars. Honestly, we'll probably see some sort of soup of all of that going forward for here, right? So, we've got a population that is that the majority of folks, I hate to even say this, but maybe even the vast majority of folks are not financially prepared for their golden years, right? And then, that's just looking at the math right now. Then you add on top of that what we see happening right now, right, where we have 40+ year high inflation. Doesn't seem like it's going to be moderating anytime soon. We see an economy that is fast slowing. So that basically is a recipe for stagflation, right? We don't know how long that period of stagflation could be, but it could be fairly prolonged, right? At the same time, we're seeing a material correction in a lot of the asset prices that have been, pumped to the moon by a lot of the government policies over the past decade, but certainly in the past 2 years or so. So you're seeing people that, whatever savings they had, they're now down probably on average, 20% if you blend in the bond and the equity losses. Some of them could be down a lot more. And then if we enter into a recession, these are people who maybe can't afford to retire going forward when they thought they could, but they might not have a job, right? Mm-hmm. If we go into a recession with layoffs, you could be seeing a large part of these, this older cohort lose their jobs, not have any prospects for getting rehired, but not have the savings to be able to afford to retire, and having this massive drain on the entitlement programs that I talked about. I mean, it's kind of this perfect storm that just says, America, and this isn't unique to America, and a lot of other countries out there, they've got this demographic tsunami of, we've got over like 55 million people right now in America that are over 65 and over, and 10,000 people are turning 65 every single day and will continue to do so between now and 2030, right? So we've just got this massive tsunami of people of retirement age. I can't even we'll call them seniors, who are potentially, tens of thousands of them are going to be financially deficient. I hate to even think about the word financially destitute, but it's going to be a massive economic and social problem in this country. And sort of like the inflation thing you were talking about earlier, Jim, we are not talking about this at all right now. This is not even on the national radar as a problem in terms of what we're talking about, in the media these days.
How should investors be thinking about this? Crypto's not performing right now. Tech's not performing. Strangely enough, gold is marginally higher year to date. How should investors be looking at that going forward?
Right. So to give you the answer that says all roads always lead to gold and silver, which, in many ways, I'm joking, but in many ways, that's very true. So pretty much, the policies that we pursued to date and the policies that I think our politicians are likely to pursue until absolutely forced to do otherwise are going to be inflationary. So I think we're going to see more of this same show. As inflation continues to run hot, it does two things. It gets so high that it creates its own demand destruction, right? Where people can just afford to buy less, right? So that's compressing margins for companies that are out there. And so it's no surprise that we're seeing, a substantial correction in equities. And, Jim and Ivan, forward earning estimates for 2023 are still projecting like 10% growth. They haven't been walked down yet. They're going to have to be walked down. And that's probably going to actually start relatively soon when we start having the Q2 earnings calls next month. And so my point is that's another shoe to drop that is mathematically going to be pushing down on stock prices. Obviously, last time I was on, we talked about all the storm clouds that are building in the housing market. That's just getting worse and worse. And I think right now, it is probably one of the surer bets out there that housing prices are going to be lower next year than they are this year. And I think if we get the type of recession that we're expecting that we might get, we could see a pretty sizable correction in the housing market. So my point is, if the problem is we don't have people that are saving enough, building enough purchasing power to fund their golden years, the question becomes more important than ever now of, okay, so which assets are going to protect their purchasing power over time? I don't need to talk to you guys about what a massive bubble has been blown in almost every financialized asset, that's in the world that's been out there, that we're now beginning to see correct. I think that correction is going to continue for all the reasons that I just sort of rattled off here. And so, I think this year is a case in point. Bonds are down, stocks are down, cryptos are down. I don't know if we have too many seniors investing in cryptos. I sure hope we don't. Real estate is going to go down, which is most people's biggest asset, right? I think a lot of people have been planning that, all right, I haven't been putting money away in a 401k, but my house has done so well, and I'm going to use that to fund my retirement. Well, those people, that plan might get a lot of cold water dumped on it if we get a 20, 30 or more housing market correction in whatever city they live in. So the big question is all right, if I need something that I'm going to buy today that is going to hold its value for the next 10, 20, 25 years, if I'm lucky enough to live that long, what are my options out there? There aren't that many. There aren't that many nearly that have the promise and potential that gold and silver do. And again, I think this year has been a great example where we have all those asset classes down, but gold is flat. And yeah, we'd all like it to be up higher, and we can scratch our heads and say, why isn't gold off to the races right now when inflation's so high? But I got to tell you, in a year like this one, under these conditions, flat is the new up by 20%.
Yeah, good point. Good point. Adam, thank you very much for joining us. We appreciate it. Congratulations on all your success with your YouTube channel at Wealthion. We'll put a link to it in the description, and
Yes,
we look forward to seeing you again in the next 2 or 3 months here.
Hey, thanks, guys. It's always great coming here and talking with you guys. Thanks for having me on. I want to return the compliment on the progress that you guys have been having. It's been so fun to watch how quickly and how massively you guys have grown. And the difference that you guys are making in the world is an important one. You talked earlier, Jim, about how people aren't getting a lot of this information in the mainstream media. I think that's one of the reasons why companies like yours and mine are doing so well right now, is not so much that we're the smartest guys in the world, but it's that we're providing a forum where people can have these important conversations that they're just not able to find out there.
I think that's very true. Our niche, we talk about silver and to a lesser extent gold topics here. If CNBC or Fox Business, if they talked about these issues, we wouldn't have an audience here on YouTube. The fact that there's that void where the major mainstream media is not talking about these issues, and there's a demand from an audience to hear intelligent conversation about this, it creates the opportunity for channels like us, your own channel, other, Liberty and Finance, or Mike Maloney, or these channels that just talk about gold, silver, and this overall subject matter. The void that exists out there thank God we have YouTube and the ability to create these channels and build an audience for it.
Well, absolutely. And honestly, the kudos really goes to your audience, right? Which is the fact that there are people out there who see the importance of getting a true understanding of what's going on here. And if they're not finding it in one area, or they're going to go find it in another media, right? I mean, these are the people that we need a lot more of in the world. We talked about how our financial or our education system does a horrible job teaching financial literacy. Well, the people that come to your channel, the people who are making it a priority in their lives to get educated and to go seek that. Yeah. So, yes, we can pat each other on the back all day long the way that we want to, but I really do want to give credit where it's due, which is to the, curious minded information seekers that are coming out and making all this possible.